Good afternoon, everyone. Thank you for taking time off to join us this Friday afternoon for another edition of Market Sense, a webinar series of the BDO Trust Group, where we combine the latest market developments and analysis with seasoned expert advice to help you take control of your investments and grow your wealth. Today's session is entitled Gearing Up for a Recovery and will be hosted by one of BDO Trust Group's seasoned investment analysts. She has over 13 years of experience as analyst for global and domestic macro research, providing economic briefings on macroeconomic developments in both local and foreign economies. She is also a fund manager who actively manages the offshore equity portfolios of institutional clients. Let's welcome our moderator, Ms. Patty San Diego.
A pleasant afternoon to all, and thank you for joining us. Nowadays, we are seeing the Philippine economy slowly open up from its first ever shutdown 6 months ago, and we saw how that impacted or resulted to the sharpest contraction for the Philippines of 16.5% in the second quarter. Now you must wonder, have we seen the worst? How can the Philippines get back on its feet? Will these impact your equity investments? And more importantly, what should you do as an investor? These are just some of the things that we'll try to shed light on in this edition of Market Sense. Today's discussion will be still divided into 3 parts. First of which, where we will have a conversation as to what are the initiatives being taken to help the Philippine economy gear up for a recovery. We will then move on to a conversation on the stock market, our outlook, and actionable ideas for your investment portfolios. Finally, we'll get you in this afternoon's conversation through a Q&A portion at the latter part of this session. And we highly encourage you to send in your questions through that chat box that you will find on your screen. Without further ado, I'll now introduce our distinguished guests that will join us in this afternoon's conversation. Our first guest is a multi-awarded seasoned investor. He was a 2-time Asia Asset Management Philippines CIO of the Year awardee and a 4-time recipient of the Asset's Most Astute Philippines Currency Bond Traders. He obtained his bachelor's degree from the University of the Philippines School of Economics and graduated cum laude. He has a master's in economics from the Pennsylvania State University as the Rotary Foundation Ambassadorial Scholar. Prior to joining BDO, he was a director of Deutsche Bank's Asset and Wealth Management Group here in Manila for 18 years. Today, he helps oversee over 8 trillion pesos of assets under management with the country's largest bank. Ladies and gentlemen, please welcome BDO's very own Fritz Ocampo. Our second guest is an academician and distinguished economist. She served as a professor and department chair for the University of the Philippines School of Economics. She has extensive research portfolio in the field of health economics, industrial organization, microeconomics, education, poverty, public policy, and regulation. One of her research work was acclaimed the 2015 Outstanding Scientific Paper Award by the National Academy of Science and Technology, the same institution which conferred on her the Outstanding Youth Scientist Award. From 2011 to 2013, she is a Prince Claus professorial chair holder at Erasmus University of Rotterdam in the Netherlands. In 2016, she was appointed Commissioner of the Philippine Competition Commission, where she served for 3 years. She obtained her BS in Economics summa cum laude from the University of the Philippines. She holds an MA in Economics for Competition Policy from King's College London. She also has an MA and PhD in Economics from the University of the Philippines. Today, she is the representative of the 2nd District of Marikina City and the Assistant Minority Leader of the 18th Philippine Congress. Ladies and gentlemen, the Honorable Stella Luz Quimbo. Congresswoman Quimbo.
Hello, good afternoon, Patty, Fritz.
Ma'am,
Hi, Stella. Good afternoon.
we are honored that you are joining us this afternoon, and welcome to Market Sense.
The honor is mine. Thank you very much for inviting me.
Hello, Fritz. Welcome back for your fourth straight episode.
Hi, Patty.
Shall we call you now the resident expert? Anyway, I know, as much as I'd like to engage, in a quick interview with Congresswoman Quimbo, I know our clients are already looking forward to this afternoon's conversation. And Fritz, you geared up to exchange notes, ideas, and insights with Congresswoman Quimbo on a topic that you are both passionate with, the economy. So Congresswoman Stella and Fritz, I'll join you later after your fireside chat.
Thank you, Patty. Stella, we're so excited to have you. Thank you for accepting our invitation to be with us in Market Sense this afternoon.
Of course, anytime, Fritz.
Well, COVID-19 has spread around the world and definitely here in the Philippines as well, and resulted in what is now known as online living, work from home, online learning, and this has really changed how we do things. First question, how are Miro and the kids adjusting to this new environment?
Well, Fritz, it's been about 180 days. So by now, we're more or less adjusted. Of course, it's clearly suboptimal, as economists would say. But somehow, we're managing.
Great to hear. As Patty mentioned, everybody knows you as the representative of the 2nd District of Marikina City. But you are also the resident economist in the House of Congress, being the only one, I guess, with a PhD in economics. Correct me if I'm wrong, but per my research, you're the only one with a PhD in economics. But very few know that you were a varsity tennis player as well in a university, with all the virtual sessions and Zoom meetings, both in the house and outside the house. How have you kept in shape? You look very good, Stella.
That's a very surprising first question. I thought you would ask me about my GDP forecasts, etc. But
mamaya na yung GDP forecast na yan.
well, one of the upsides of this staying at home and doing everything online is that there's a lot of time to exercise. So I make it a point to do at least 10,000 steps every day.
Wow.
So I have a Fitbit here. Yeah,
Fitbit,
so in the last
okay.
180 days, 8 days lang yung na-miss ko sa 10,000. So far, I'm doing okay on that.
Good. That's good to know. The world is now faced with a health crisis, probably the first since the 1918 Spanish flu. And as Patty mentioned, prior to your stint in Congress and the PCC, you taught for over 15 years at the UP School of Economics. In your various research work, have you seen any public health or economic crisis of this magnitude, whether globally or locally?
Fritz, none at all. Like, I was checking our unemployment figures. So for the first quarter, so we ended April with a 17.7% unemployment rate. I was curious to know, I wanted to know if this is indeed the highest ever. And it turns out that since 1956, when we started to do the labor force survey, this is the highest ever unemployment rate. So I think this is really the biggest and the fastest in terms of impact. So can you imagine within 3 months, we balloon to a 17.7% unemployment rate. That's very, very fast.
Right. We looked at it ourselves and we researched in both the unemployment figures as well as the quarterly GDP numbers. And clearly we have never seen anything like this before. And that's why at BDO, The title of our series the whole year is A Crisis Like No Other. And you just confirmed it. Definitely, we've never seen anything like it before. Unknown to the public, Stella specialized in health economics when she completed her PhD. Again, the only one or one of the few who looked and specialized at health economics. And clearly, you are at the right place at the right time. My question is, what is needed to manage the spread of COVID-19 in the Philippines in order that we may continue to open up the Philippine economy?
Well, Fritz, to be fair to government, they've really been trying as hard as they can to control the spread of the pandemic. But if, again, not to be a critic, but rather to make suggestions on how we can better control the spread of the disease, I think we can focus on maybe three additional things. The first one is doing a better job with data in terms of collecting data, making sure that whatever is collected and reported are accurate. It's very important. Right now, there are delays still in reporting cases. We have fresh cases, we have late cases, etc. So we should, of course, try to eliminate that. And then number two, once you've collected the data, of course, it's very important to do the analysis around it. So again, it has to be science-based. Why? Well, because this is new. This is something unknown to anyone in the world, right? So we've got to be guided by scientific methods. So that's the first. Number two is, I think we should do, or we can do a better job figuring out human behavior better. Meaning, try to understand the incentives, for example, for people who need to be isolated to, in fact, agree to be isolated in a government quarantine facility. In my district, I know of a lot who actually need to be isolated, but then clearly when you're isolated, then you can no longer work and therefore feed your family. So that's an example of where government can step in. If we are sensitive to all of these needs, we're sensitive to how we behave, right? As Homo economicus, if you're appropriate, then the government should be able to provide the appropriate response. And then number three, we need to have a better understanding on how government works. And when I say government, I mean national as well as local. Health is a decentralized service. So there are many things around health that LGUs have to decide on. But right now, it would appear that it's a very centralized approach, right? Which is okay. However, clearly many things have to be done on the ground by the LGUs. So there has to be, I think, a better coordination between the various levels of government. In short, a better coordinator, like in an orchestra, your conductor, right? So I think that's where we can improve on. And maybe the approach should be not really, we shouldn't look at the COVID problem as like a peace and order problem. It's something else. It's not like that, right? It's not like if cases in a particular place would all of a sudden balloon, that you all of a sudden send someone who will close down everything. I think it's more complicated than that. So the approach should be, as what I mentioned earlier, based on science, more sensitive to how humans behave and respond to incentives, and finally, better coordination among various levels of government.
You mentioned earlier the importance of healthcare, and in the Philippines, we've been underinvested in health. With only 100,000 beds in the whole country, both government hospitals and the private sector. How should we approach healthcare in the Philippines? And should this be government initiated, or should the private sector take the initiative here?
So, we really have a big problem with access to healthcare. There's one statistic that I've been monitoring since the early 1990s. Mahahalata ang edad ko, Fritz. But in the early 1990s, one of the very first statistic that really struck me was the following: 60% of Filipinos who die, they die without seeing a doctor. So, and it turns out that up to today, that statistic is pretty high. Like in terms of COVID, somebody recently reported, I think it was Senator Villanueva, he said 48% of those who died of COVID died without seeing a doctor. So hanggang ngayon, mababa pa rin ang access to care. So what do I think is the best model? I suppose that's your question. I think it should be a model that has a mix of both public and private providers. And currently that's actually the situation. But what needs to be improved upon is exactly what that mix is. So in the case, for example, of outpatient care, like when it comes to primary care, should that be provided by PhilHealth, which is an insurance program? When it comes to hospitalization, who must pay for that? So from an economic point of view, clearly hospitalization, that's an insurable risk, meaning you cannot predict when you need it. So therefore, that's insurable. It's most efficient to provide for hospitalization through an insurance program. But if you're talking about primary care, meaning consulta, right? Meaning consultations with doctors, checkups, etc. That's not insurable in my mind. So that has to be provided for by the government directly to the people. So it's a mix of both. And again, it's really because of basic principle. There's certain things where markets would fail. And when markets fail, then that's where government must step in.
That's clear. That's clear. Looking at the economy right now, the Philippines is currently facing its worst economic downturn in our estimates in 35 years. Stella was the first to file a fiscal stimulus bill prior to the March 15 ECQ. And at that time, Stella, correct me if I'm wrong, the bill was around 108 billion. Why is more government spending needed, especially during an economic recession?
So before I get into the technicalities as to whether it should be 500 million or 500 billion or
yes,
1 trillion.
Just the concept first.
Just the concept.
Why is government spending needed?
Yeah.
Especially in the context of a recession. Yeah. Because the layman, the non-economist would say, may crisis. Kailangan natin wag gumastos, mag-save tayo, no? What happens here from the household against a government perspective?
So 2 points. The first is that in a very bad economic crisis, confidence levels are very low. Confidence of your consumers, confidence of your workers, everyone's afraid to leave their houses, right? Because of the virus.
Fear and anxiety has set in.
Fear, anxiety, even business owners, obviously, they don't want to invest. In fact, they'd rather just close shop, right? So confidence levels are very low. And this is a situation where government must step in. So Fritz, just to simplify matters, parang sa bahay. So if my son is having a very bad time, he looks at me and my husband, so his parents, as the provider, the ultimate provider of help, right? And if that assistance or help is not going to be forthcoming, he's going to have very low levels of confidence in terms of whether he can cope with the situation or not, right? So all of us here are having a bad day at home, at work, right? And so we need, and if the government is not doing anything or not spending enough, then our confidence levels are going to be deflated, right? So that's a sort of basic principle here. It's really, we need government to spend in order to boost confidence levels. It's number one. Number two, we need government to spend because, as I had mentioned earlier, there are lots of market failures arising from this pandemic. Simple example, public transportation. So because of COVID, then we have social distancing protocols, right? So ito na nga yung debate. Should it be 1 meter? Should it 0.75? Should it be 0.5? That's where we are now, right?
Let's not even get into that topic.
Yes, exactly. But bottom line is, with reduced passengers for, let's say, a jeepney, and on top of that, a jeepney operator would have increased costs. They would have to disinfect, they would have to purchase masks. So you have reduced revenues, you have increased costs. Therefore, less profit. Or in fact, you'll be operating at a loss. But so if you're operating at a loss, even if pinayagan ka ng DOTR to finally run, will you actually do it? Probably not, right? You'd probably just say, oh, forget it. I'm going to get lugi anyway. I'd rather stay at home. However, public transportation is needed, absolutely, to bring our workers to the workplace so that you can finally restart the economy, right? So then clearly there's market failure, right? So even if government says, okay, you can now make living out of this, GP drivers, you can now operate, ultimately, because they're not viable, then they won't. And then what happens in the end? The economy doesn't reopen. So that's a situation where clearly government needs to step in and subsidize jeepney operations, which is why we said there has to be some form of service contracting, meaning kokontratahin dapat ng gobyerno ang binabiyahe ng isang jeep sa buong araw, right? Or fuel subsidies, right? Or health cost subsidies. So that's an example of, because of a market failure, right, which gets magnified, right, because of the pandemic, then clearly you need the state to step in and spend for that purpose.
Well, Bayanihan II was just recently approved at the BICAM and signed into law, and this provides an additional 165.5 billion of government spending for COVID-19 measures. Is Bayanihan II enough to stimulate the economy?
Absolutely not. What we stand to lose with a 5.5 projected contraction of our economy for the year 2020 is something like 2.4 trillion pesos. So again, I'm not going to go into the details. Right. You stand to lose 2.4 trillion pesos. Yung pangtapal mo is 165 billion. That's so really a drop in the pocket. Talagang kulang.
Malaki pa yung butas.
Correct, right? And remember that you need to spend more to avert losses. So you have very huge losses that are going to be expected, right? But then the buttons that you're going to push are going to be so small. So that's the problem. But so we await for, well, that's why we're really doing careful scrutiny of the budget. So we want to make sure that there is a sufficient COVID response in the GAA 2021. So that's one opportunity to rectify the situation. And number two, we've been pushing for Bayanihan III even before the president even signed Bayanihan II. And we're ready for that because Congress has actually passed the Arise bill as early as June, which can be obviously material for a Bayanihan III.
Let's now go to the Arise bill. So the Arise bill, the Accelerated Recovery and Investment Stimulus for the Economy, or Arise bill, co-sponsored by yourself and Kong Joey Salceda, whom the financial market is very familiar with as well, calls for a 1.3 trillion government spending over a 3-year period. First question, okay? How did you come up with that 1.3 figure? Ano ba yan? You just plucked it out? Is this all pork barrel? How did you come up with that number?
Well, again, the amount of your stimulus depends on the expected economic loss, right? So at that point in time, we were thinking a 2.4 trillion economic loss caused by the pandemic. We divided that by what we call a fiscal multiplier. Okay, what's a fiscal multiplier? For every 1 peso that government puts into the economy, that would flow from one sector to another, etc. For example, government puts in money in a construction project. Of course, a construction project would need construction materials, right? So in other
Okay.
words, there's some activity that's going to be stimulated in a different but related sector, and so on and so forth. So if you add up all of those domino effect, so to speak, that 1 peso becomes 1.53. Right? So if you have 2.4 trillion peso damage that you want to avert, then you divide that by a fiscal multiplier of 1.53. That's roughly 1.3 trillion.
Okay.
So that's more or less
So
how
that's
we
the
got that.
fiscal
But
multiplier, the effect
yes,
on different parts of the economy
yes,
for every
yes.
1 peso that is spent by the government.
Yes, but then we spread that over 3 years. Of course, we understand that there would be difficulties in raising funds, which economic managers keep repeating, right? And
But
so that is really a play.
in your original proposal, the 1.3 trillion was for 1 year, right? It was
It
a
had always
compromise
been.
reached with the economics team.
It has always been actually a 3-year plan.
Okay.
But then maybe Fritz, what I can add to that is there's another economic stimulus package that was approved by Congress. The same time we approved the RISE, which is called the Cures Act, and that's an infrastructure bill. And that amounts to 1.5 trillion. So spread over 3 years as well. So if you add the 1.3 and the 1.5, the 2.8 spread over 3. So you're looking at roughly about 1 trillion per year.
Yes, that's exactly what I was looking at. Because when you and Joey started discussing a stimulus package, government was assuming a 3.5% contraction of Philippine
Yes.
GDP. And right now, the government has bumped it up to 5.5, and the market is looking at 6.5, and we at BDO we're looking at 8. So
Yes.
if because of the longer uh, uh, ECQ or lockdown and the steep uh, mobility restrictions that we're headed for a deeper recession, uh, realistically, should we be talking about a bigger number even, Stella?
So realistically, if I had my way, I would put in this 1.3 just for a single year, as
Okay.
you have just mentioned earlier. That for me is the appropriate scale of stimulus that would be required.
But
But
you're just trying to
again,
balance it off with what is acceptable
finances, yes,
from the
absolutely.
finance official's point of view.
That's one thing. The other important thing is absorptive capacity of government. So the problem
Right.
is, even if you cough up that entire amount that's needed, say cough up 1.3 trillion, but then would government agencies be ready to actually
Spend it.
implement those programs?
Right. On the other hand, so on one hand, many are calling for more aggressive government spending. On the other hand, there are concerns that the government is just piling up a huge debt load that our grandchildren and our grandchildren's children will be stuck with. Are these also valid concerns?
Let me start by saying, Fritz, that when a country takes out a loan, it's not the same as if a household takes out a loan. So of course, if I as a mother would take out a loan amounting to 100 million pesos, and for some reason I don't use that, then clearly my son and his kids will probably have to take over my loan, right? But that's not the case of a country taking out a loan, because
Right.
remember that you have your own bank, right? You have a Bangko Sentral ng Pilipinas. So those are it's not comparing apples and apples, because the instruments that are available to a country is certainly not the same as what would be available to a family taking out a loan from a bank. Okay, that's first point. Number two, in fairness to our economic present and past economic managers, they've earned a good credit rating, right? And what a good credit rating means, of course, Fritz, you're in a better position to explain this. Simple lang yan. That means that if you have a good credit rating, that means you're credit worthy, meaning kung mahaba ang pila sa mga bansang umuutang, mataas ang credit rating mo, mas mauna ka. Why? Because you are adjudged by the bank as being in a better position to pay back. And then number two, it's very important to have legislation that comes with borrowing, because clearly we can make sure we need to put in all the control measures to ensure that whatever loan we get, we use those proceeds productively. Right? So dapat alam na natin, no? Saang sectors ba natin yan ilalagay? For what specific purpose? Ano yung monitoring dyan? How do you know that productive ang use niyan? In other words, simple lang yan, Fritz, di ba? Kung umutang ka sa bangko para dapat sa negosyo mo, pero ang ginawa mo, pinangsabong mo, talagang hindi ka makakabayad. Di ba? So,
Stella, when my clients ask me, what does a recession mean? Of course, we say the economy slows down, but in reality, the effect is job losses. And as we mentioned earlier, the unemployment rate in April spiked close to 18%. The latest July number has eased to 10%, but at 10% of the labor force, we're still talking about close to 5 million that are jobless. What sectors should the government focus on to maximize the benefits on the proposed 1.3 trillion spending? And second probably is, how can a rice bill help small businessmen survive this pandemic?
well, so let me start by pointing out that even if unemployment has eased from 17.7 to 10%, I think there's still a problem with the quality of jobs. If you look at the numbers more closely, what happened was there was an increase in the number of self-employed with no worker and unpaid family worker. In other words, it would seem like yung sweldado, halimbawa nung March or April, and then nawalan sila ng trabaho, ang nangyari is they now became self-employed, meaning they're probably trying to make money, maybe selling food, for example. So in that situation, the numbers would classify you as being employed today, even if your quality of work is not too high. So if you add up the unemployed, the underemployed, the self-employed with no worker, and the unpaid family worker, which is the lowest level of employment, that's still 27 million Filipinos. So that's still a lot. So the 10% that are reported, although of course that's correct because we use a global standard to define employment, but the thing is, again, the reality is low level of quality. So what can we do? Clearly, the sector that government must focus on is really the MSME sector. There are 1 million registered MSMEs, but then my estimate, the informal or the unregistered ones, can run up to 6 million, 5 to 6 million yan. So many of these have already closed. So these are the ones, so this is a sector that government must really assist first. And in fairness to our BSP, they've introduced a lot of proactive monetary policy even as early as March. Of course, you know that, Fitz. And this has resulted in an increase in liquidity of about 1.3 trillion pesos in the financial system. So in other words, there's a lot of loanable funds available. But the problem is, again, we go back to low confidence levels. The banks are not willing to lend. The MSMEs are not willing to borrow. And more importantly, unlike our viewers today who are mostly clients of BDO, 77% of Filipinos are unbanked. So even if you if you increase loanable funds in the banks, the problem is people don't even have bank accounts. So that's the situation now. So it's not as simple as increasing or infusing more funds into existing credit programs. It's really, we've got to do a better job doing credit mediation services. In other words, really get people to be introduced into the formal banking system.
And the Arise Bill will try to bridge the gap so that the SMEs will be able to access credit, right?
And, so
and this will be subsidized credit.
So well, 2 points. So in addition to credit mediation, we also have a proposal for credit guarantees because we know that many of our kabayans won't have collateral. And so, of course, the even better alternative from a bank's perspective would be a government guarantee. So we've proposed funds for credit guarantees to be given by the Philippine Guarantee Corporation, right? And then number 2, again, of course, low interest loans. In fact, under ARISE, we said 0 interest loans. And we said that these loans would have labor conditionalities, meaning if you're a small business and you take out a no interest loan under a RISE bill, you have to promise that you will keep your workers. So it's like 2 birds with 1 stone. You ensure business continuity. Ultimately, you protect the worker.
One way of creating jobs, Stella, is trying to attract foreign direct investments. And this number has continued to plunge, close to 70% down in 2Q. And meanwhile, many Japanese and US firms are slowly exiting China and shifting to Southeast Asia in order to reduce the concentration risk. Can we prepare a package consisting of like 15 or 20-year incentives so that we can attract Japanese, US, or even Korean firms to the Philippines? Have you started to look at this?
Well, okay, Fritz, I think 2 points. One is we have to do a better job controlling the COVID situation because I think foreign investors will really do their comparison of potential places to invest in on the basis of the COVID situation. They would not want to go to a country where they will just get sick, right? So that's the first. And remember that Vietnam is doing a great job controlling the COVID cases and number of deaths, right? And so, so that's one big threat for us in the region, right? We want to make sure that we have to at least be in the middle in terms of COVID cases. As of today, we have the highest number of deaths, COVID deaths per population, right? So that's 4.2 versus 3.2 of Indonesia, right? So that's the first. And number 2, you're right. With respect to incentives, I think what is important from an investor's perspective is predictability. So right now, there are questions on the predictability of incentives. I am all for rationalizing incentives because there really are incentive splits that are really just irrational, meaning supporting businesses when, in fact, businesses would be expanding anyway, even without government incentive. So that's an example of a redundant incentive. And if you look at the full list of incentives, there are some of those. So I do agree that there's a need to rationalize. But on the other hand, if you make an announcement that, oh, you know, we're just gonna end all of those, then it really it introduces some uncertainty from a potential investor's perspective. So, di ba, kung ganun lang pala, ano yung pinamis mo na incentives na dapat, for example, 20 years or maybe even indefinite, all of a sudden, sasabihin mo, 5 years na lang. Di ba? So it's really those two things. The COVID situation and the other would be predictability and uncertainty in terms of what incentives that they would be able to get.
Thank you. Thank you very much, Stella. There's still a long list that I want to ask you, but we've run out of time. I'd like you to ask you to stay behind for the Q&A with our audience later on. For now, I'll pass the floor back to Patty. Thank you, Stella.
Thanks.
Thank you, Congresswoman Stella, and we'll see you back in the Q&A. Fritz, how are you? Are you still good?
Good, we're good, we're good.
You're good?
The time is flying.
Yeah, I know. The past hour has gone by so quickly. And do I still have time to ask you questions this afternoon?
Go ahead, go ahead.
You sure about that?
Yep.
All right. Okay. So Fritz, how's your schedule? Are you still as busy as you were in July and August?
Yes, actually, for July and August, we were very busy. We were all over the place.
PE
Trying,
outlets picked up your presentations.
we're trying
And
to, there was so much uncertainty. And as we've been just discussing with Stella, this is like a crisis like no other. So many people couldn't understand the magnitude, and we had to go out
of
of our way to try to explain.
right, right. And you didn't ask this question to Congresswoman Quimbo earlier. She wanted you to ask her fearless forecast. So now I'll throw that question to you. In June and July, you had quite a reversal, taking into account the pandemic and what you knew back then. So from a 6.5% GDP entering the year, your revised 2020 GDP forecast, when you were presenting in July and August, was at 5.9% contraction. But I picked up something from your discussion with the Congresswoman earlier. You mentioned something like a new number of around 8% contraction.
Yes, Patty.
Correct?
Yes, in July, from May to July, we were calling for a contraction of 15.4% for the second quarter. So when the actual number came out at 16.5, believe it or not, BDO was the closest to the actual figure. And since then, we just had to tweak our figures further, and we're now calling for a contraction of 9.6 in the third quarter as the economy reverted to MECQ in August.
August, right?
And then we're calling for a 6% contraction in the fourth quarter to bring our full year 2020 GDP contraction to minus 8.3.
So I'm actually going to have to change my original first question for you was to ask you if we are still on track to meet your full year expectations. But currently you're saying, things have changed since you were doing your presentations in starting in July. And so
So we
yeah,
adjusted our number, and we're now looking at minus 8.3 for 2020, and then a recovery to 6.6% in 2021. So
again you said
that's the positive silver lining, Patty, that uh, as more of this government spending enters the real economy, then it would allow the economy to recover, and that would be the 2021 story.
right. And talking about that, I think quite a significant rebound for 2021 that you're looking at right now of 6.6%. No, that somehow underlines what you've said in the past that just like Filipinos, the economy has been quite resilient over the last 2 decades, making it what you've been saying, like the Philippines has been a darling to foreigners. But we are faced as what we're now looking at as a once in a generation pandemic, and it puts the gains of past decades at risk.
Yes.
Yeah,
When you look at it, we're facing a recession which could be the deepest recession in 35 years. And therefore the growth drivers were hurt a bit, especially the consumer side, consumer demand, which is 72% of the economy, as well as investments from the locals, from your large local corporates, as well as the SMEs that Stella mentioned earlier. So, but from here, as the economy slowly opens up once again, you'll see those drivers bouncing back.
right. So I guess my question for you here is that if you see a recovery, after we hurdle this crisis, this pandemic, COVID-19, do you think the Philippines can stand out once again in the global stage?
Well, I believe so, Patty. When you look at it, the Philippines had 21 consecutive years of economic expansion, matched only or surpassed only by Australia. So that by in itself is a testament to the resiliency and strength of the Philippine economy. And I believe that while the growth drivers were hurt during the pandemic, as was the case in many other global economies,
Yes.
um, the fact is that the the strengths of the Philippine economy remain intact. For instance, our demographic dividends, our young population is still there. Average age 24, growing by 2.4% per year. That's still there. Um, and in a pandemic, as COVID-19 spread, you could see the value of that young population in terms of adaptability to the digital economy, in terms of proficiency in the use of internet. And later on, this young population, many of them will be creating their own companies, and become entrepreneurs rather than employees in an established company. Uh, Simply put, because as Stella and I discussed earlier, many jobs were lost.
Yes.
The unemployment rate is high, and so to cope, this young population will create their own companies, may it be selling food, and baking desserts, to actual setting up of digital platforms.
So you're saying, we entered this crisis with one of our strengths, which is a young demographics, and combine that with innovation, especially from the millennials right now, or basically, Filipinos being creative nowadays, as what Representative Stella mentioned earlier, from being jobless, many now are self-employed. So, we're being, I guess, in a way, you can say we're again showing resiliency, as Filipinos. And I had to ask you that because, again, I like to go back to your previous presentations or your past briefings, wherein you not only presented the resilience of the economy, but you link it as well in terms of your expectations on the stock market, right?
Right.
And if you're saying we have these underlying strengths, as we get through this crisis, and then your discussion, or you combine it with what you discussed earlier with Congresswoman Stella in terms of increased government spending, initiatives that are still needed to get the economy back on its feet. Well, these are all pro-growth measures. And my question to you now is, if you combine all these factors, will these impact the equity market, the local equity market?
Definitely. Because, okay, when we look back to the second quarter, wherein we practically shut down the Philippine economy, and everybody stayed home. Um, there, the consumption of the Filipino consumer was just limited to essential goods. And you look now what we're going through as we slowly open up the Philippine economy, workers will go back to the workplace, consumers will start buying again, especially as the sales have hit during the September season, and there will be more economic activity. As government now spends for more infrastructure projects again and unleashes all of those NEDA approved projects, then the knock-on effect all the way from the construction worker to their families in the countryside will rev up the economy again. So the stock market, being a forward-looking indicator now, will monitor these developments, and buyers, both foreign and local, will slowly accumulate companies that they feel could do well in an economic recovery. And so to answer your question, yes, definitely the stock market, not only the Philippines, but global equities, which have been hobbled by the lockdown measures, and asset prices have collapsed by as much as 20% at one point, will
Or
also recover moving forward. Will also recover as earnings visibility becomes clearer to the CEOs, to the presidents of the different companies. Then they could guide investors more effectively moving forward.
So you mentioned there are two things, the fiscal spending or the government spending, uh, and then on the private sector, more visibility on the corporate side. Uh, those are the catalysts that you're seeing now for the local equity market. Anything else that could, boost or renew interest for investors, whether foreign or local, to get
Yep.
back to Philippine equity?
When you look at catalysts moving forward that would affect the equities market, I could name you three, Patty. The first is what we discussed with Stella, an increase in government spending. Whether it's in the US, in Europe, or here in the Philippines, government has to step up. And that's why we discussed that thoroughly with Stella earlier. Second would be the opening up of the Philippine economy, the move from ECQ to GCQ, and then on to MGCQ,
Okay.
and then further down to a normal scenario.
Basically saying easing of mobility restrictions.
Yes, definitely. And that's why hot in the dailies this past few days is the reactivation of public transport system. As Stella mentioned, that's very critical
Yeah.
in
Yes.
moving the workers from their homes to the
Their work,
construction
yeah.
site, from their homes to the office, to the workplace. And third is vaccine development. While the Philippines most likely will not develop any vaccine, globally, we're talking about more than 140 institutions involved in vaccine development. 25 are in human trial, and 6 are in phase 3 of human trial, meaning they need to get 30,000 to participate in the trials. And it's just a matter of time. As we guided the last talk we had, when you listen to the WHO, Bill and Melinda Gates Foundation, and Tony Fauci of the US, they're all guiding for a commercially available vaccine in the developed countries sometime late second quarter to the fall of 2021. And these vaccines would reach the emerging markets like the Philippines by the first half of 2022. But equity markets, Patty, being a forward-looking mechanism, the moment that vaccine is approved, stocks would already begin to rise. Simply because the light at the end of the tunnel will become clearer to the investors, and that could trigger a stock market rally moving forward.
Fritz, you sounded like a national public health advisor right there with
Yeah.
that answer of yours on the vaccine.
If Stella has a PhD, I pretend I have an MD.
Okay, but basically you're saying there are several factors to watch out for, not just in terms of an economic recovery, but also for a stock market recovery. And that's
Definitely.
that's what I want to ask you next. You said again in your past briefings that markets will recover from crisis. It's just that this, and you mentioned this with your conversation earlier with Congresswoman Stella, this is a crisis like no other. So in terms of the pace of recovery, it might not be the same for all. Now, when you look,
Definitely.
when you now look at a Philippine economic recovery, what sector should benefit, or what sector should we look at as the economy later on gears up for that recovery?
So for this year, Patty, when you look back to this year, uh, from a very positive view, we were hit with the pandemic, we went on lockdown, we called for the recession, and stocks that benefit in a downturn are what we call the defensive counters, no? Sectors and
That are defensive for
yes, sectors or companies that each one of us would need despite there being no economic growth. For instance, your cell phones.
this.
None of the Filipinos would give up their cell phones.
Right.
One. Number two, buying food from supermarkets. No.
Yes.
And third would be the utilities. You'd still need to switch on your power. It's very warm, so you turn on the air conditioning unit. You still need to take a shower. So when you look at the stock market performance this year, It's these defensive stocks, no? The telcos, PLDT and Globe, retailers, Pure Gold, that did very well. So we now gear up for the recovery. In a recovery, the economy will open up again. People will go back to the workplace. People will go back to consume because they have jobs now and they get their salaries again, so they'll begin to consume. So now you move towards the cyclical counters. The cyclical counters are the banks and property and the conglomerates that own the banks and property, which admittedly, I think in your chart, these are the worst performing stocks this year.
Yes, they're at the bottom of the screen right now on the right
They're
hand.
the bottom of the pile. They're the worst performing. And therefore, there is a mega sale, Patty. It's time to buy these stocks because they will not remain at the bottom of the pile. As we open the economy and the loans start flowing from the government banks to the private banks, we will need the banks once again. When the economy opens up, Bayanihan I and II, which waived the fees of the banks, that will be a thing of the past. And therefore, on a year-on-year comparison or on a quarter-on-quarter comparison relative to the second quarter of 2020, you'll see a spike in the second quarter of 2021 and hopefully in the second half of 2021. So the cyclical counters have to be the focus of investors if they are buying specific stocks in order to gear up for the recovery that we're going to experience in 2021.
You discussed a bit in detail why you think that the banks would be one of the beneficiaries as the economy gears up for recovery. Another sector that you mentioned, if I believe, correct me if I'm wrong, Fritz, you said property, right?
Yes.
Yes, part of the cyclicals. But aren't there concerns right now when it comes to the property names, the listed names, in terms of outlook about the various businesses under a property name in the market?
Yes, definitely there are headwinds right now going against the property sector. The malls being closed or only 50% of capacity, people working from home, and therefore the demand for office space is weak. Even launches of new residential condominium units are practically down, if non-existent. Okay, but look at it. Watch the reform measures that are in the pipeline. The FIST law will allow banks to clean up the non-performing loans. When we look back to the 1997 Asian financial crisis, I don't know if you were still in shorts, Patty. It took 10 years for Congress to pass the special purpose vehicles that allowed the banks to remove the non-performing loans and put them into a special purpose vehicle. During this 10-year wait, after it was over, what happened next? Banks started lending once again. And under the leadership of Governor Ben Jokno, at the height of this crisis, he proposed the FIST law, which will allow the banks to clean up the expected non-performing loans at the soonest possible time in order to reignite loan growth in the banking industry. And this is very exciting because rather than wait until we know all of the final figures, right now the BSP has taken a proactive approach, and both the lower and upper house seem to be very receptive to having the bill passed.
Thank you, thank you for your, shall we say, stock or sector picks for an economic recovery, Fritz. Now, let me ask you one last question because we can't end our conversation, our one-on-one today, without having to ask you for what your advice will be for our clients. But let me divide it into two sets of clients. Because when I'm looking at the chart, the left one on the screen right now, you said the economy was resilient. You know, we saw that translate into the stock market and it surged to a high of 9,000, that peak right there in 2018.
Yeah.
So our clients must have gone in and out or gone in, invested in the stock market at different points. What about for those, first, what is your advice to our clients who have existing equity investments?
Okay, that's a very good question, Patty.
I'm going to say tough question.
Yeah, tough too. So for existing clients that have investments in the equity markets, and let's assume that it's in the red, that they're losing money. Because for those that bought very early and are still in the black, then there's no problem. But let us assume that they are in the red. They bought somewhere between 7.2 all the way to 8.7, let's say. And right now the market is at sub 6,000, and therefore they're losing money. And so I would encourage them, if they believe our story, that an economic recovery is imminent, to use this lull wherein the market is consolidating at the 5.7, 5.9 area as the buying window. Because clearly, in terms of the real economy, we have seen the worst because we completely locked down the economy. And I don't think that policymakers are willing to lock down the whole economy again.
I don't see us going back there, okay?
So on a relative point of view,
Okay.
that things should improve relative to the total closure of the Philippine economy. And we're seeing this in other markets as well. It's just a pace at which you're opening, okay? So there are just two choices for them. For those that are invested, that are losing money, it's either you hold and don't do anything, or look at your cost, and if you can significantly average down your cost, and that would allow you to bounce back faster once that economic recovery takes place.
Okay. Now, that's your advice for clients who are currently holding on to equities, to equities. Now, what about for our clients right now who have joined, but they don't have any existing exposure or not invested in the stock market?
That's a valid question as well, Patty, because when you look at the Philippine population, less than 1 million invest in the stock market. And it's for various reasons. They're scared, it's too volatile, it's too risky, I don't understand it, whatever. I'd encourage them to look at the stock market today seriously, because in the past, the rally was just too fast. And now it has consolidated, it's correcting. And when you look at it, 5 years down the road, Patty, 2025, 7 years down the road, 2027, do you think things would get worse or get better? I'm willing to bet on the latter.
We're all hoping for it to become better. Yes.
Right. I'm willing to bet on the latter, that things would improve and get better over the next 5 to 7 years. And if you share that view, because this is an aberration, a crisis like no other, it only happens every 100 years, then this is your buying window. I'm not telling you guys to put all your money into the stock market, but from zero, you can consider putting 15%. And if I'm right and the market recovers, then bump it up to 20%. So it's a slow accumulation, Patty, or even go from 0 to 10%, okay? Because you've never experienced it. So do it slowly, but at a time wherein global and local interest rates are at historical lows, there is just no other investment. No? Your real interest rates right now are at negative levels. So why not consider equities and put just a little of your total portfolio, of your total assets into the equities market, and do it gradually.
Okay. Fritz, I'd put you now, allow me to ask you one more question. If I put you now in our client's shoes and you're talking to them, and sorry, you're talking to yourself, where would you put your money in right now as you gear up for an economic recovery?
Okay, Patty, it's the Burr months, and when I ask our audience, when do you guys go shopping? Do you go shopping at the peak of the Christmas season, or do you go shopping when there is a sale? And definitely, in chorus, our clients will answer, I go shopping when there is a sale.
A mega sale.
A mega sale at that. So for me, as an investor, I look at assets that have gone down in terms of price. And it was very clear that global and local equities corrected the most, especially since mid-March. But even at these levels, the Philippine stock market is still down 24% year to date. And so to answer your question, what have I invested in? I invested in both global and local equities through funds, through existing funds, simply because I don't have time to manage my own money because I'm doing it for our clients. So that's what I'd look at local and global equities, accumulate slowly, especially in bombed out funds or bombed out stocks. And then second, later on, if the property market really does correct, and you can see land values go down and offer discounts, that would be your other area that you may want to look at, properties.
Okay. So you're an equities and a property kind of guy right now. Okay.
Yes, because I'm still young, Patty. I'm still a millennial, right? I still have many years to go.
Need to ask for your secret how you kept that youthful look of yours all these years. Anyway, Fritz, as much as I'd like to also ask you more questions for this afternoon, I believe it's now time that our clients get to ask you and Congresswoman Stella their own questions. So at this point, we'll ask Congresswoman Stella to join us again, this time for the Q&A portion.
Okay, start, Patty. Do we have questions from our clients?
I have one here so in the Q&A, just brief Representative Stella, I'll throw a question to one of you, but the other one can just reply afterwards. All right?
Go ahead.
Ma'am?
Yes.
You're there?
I'm back.
Okay, thank you. There you go, ma'am. Welcome back. Ma'am, I had to check if you're back on because the first question is for you.
All right.
Okay. Ma'am, in terms, we'll let you wear your economist hat here. So there's a question wherein, do you agree or do you share the view that the extent of mobility restrictions during this pandemic will determine the depth of a contraction, but at the same time, the easing of such restrictions will also be the key to an economic recovery?
Oh yeah, absolutely. The thing with a shortage of public transportation is that the effect is almost the same as a lockdown. So if you look at Google's mobility index, on periods of time where you don't have a lockdown, but then public transportation is short, it's as if lockdown pa rin, the mobility index. So that's really your key. You don't have to be so technical, right? If you cannot, if you have stranded workers, right, and then you're unable to produce. And many of the businesses, that's their main complaint to us. Kahit naman na-relax na ang lockdown, but then if the workers are all absent, then there's nothing to produce. So that's really key. So that's why really pushing government to allow the jeeps to finally operate, because we still have about 38,000 jeepneys that are not allowed to operate. Yet we have 1.7 million stranded workers on a daily basis, right? So of course, and now they're debating, should we reduce the social distancing measure from 1 meter to 0.75, thereby increasing passengers by 1 to 2? So in my head, I mean, that's increasing the jeeps is a more impactful response, right? Because if you free up 38,000 and each of those would have 10 passengers, 1 meter apart each, then that's 380,000 kaagad versus you have 70,000 jeepneys. You just increase each with 1 passenger. Then the increase is only 17,000. So increasing jeepneys talaga would be the most, I think, rational way to address shortage at the moment.
Patty, did you get lost in the math?
That's exactly the reason why
See how fast she did that in her head
I know that's why
without a calculator?
it had
But
to
that's
be
all
you.
times 10, so it's easy.
Okay.
No, that's the reason why it had to be you, Fritz, to do the one-on-one with Congresswoman Quimbo earlier. I'd probably get lost.
You could turn pale with her math.
All right, thank you, ma'am, for that. Okay, the next question I'll give to Fritz. Well, we did. Oh, what is your Fritz?
Yes, I'm here.
You ready to take in another question?
Go ahead.
All right. What is your advice for investors who are now fearful that their investments in equity and mutual funds are in the red? But you already answered that earlier.
Yep.
So would you like to, do you have an additional reply for that?
Well, if you're fearful and you're incapable of taking action, just don't move. Okay? Because if you take your losses now down 35 or 40% from your original cost, there is no investment outlet that is legitimate that will allow you to recoup those losses.
Okay.
So if you're fearful to average down and buy some more to bring down your cost, just don't take any action. Just don't move. And you know, things will get back, maybe slowly, but we're not going to get stuck in this huge hole for the rest of our life.
Okay. Okay. The next question I'll give to Congresswoman Stella. Because, ma'am, the question is, well, you did touch on the increasing government borrowing in your conversation with Fritz earlier. But this time, it's asking about the risk, the possibility of credit rating downgrades for the country with the current economic conditions, the deterioration in economic conditions.
Oh, I think Fritz would be in a better position to answer this, right? But I'm not sure if I'm going to give a biased answer, but of course, ultimately, if your country, if your economy is not going to perform as expected, given your current credit rating, then you probably won't deserve an upgrade in the next round. So, but I don't know. Maybe we should ask the banker.
Okay.
Fritz is probably in a
it.
better position. Yeah, but
I'll take that
yeah.
question, Stella.
So it's a more
Okay.
objective reply, right?
Okay. The question is,
Okay.
are you fearful of a credit downgrade? Okay. And to get a credit downgrade, your ratios have to deteriorate. When you look at critical ratios that the credit rating agencies focus on, such as number one, fiscal deficit to GDP ratio. Sure, from 3%, everybody is now higher. And for the Philippines, it's at 10%. But Singapore is at 16 and the US is at 21%. Okay, so if they're going to give the Philippines a downgrade on that matrix, then everybody would be downgraded. Number two, when you look at debt to GDP ratio, so from 37 or sub 40%, it will now head towards 52. But when you look at the ASEAN region, our neighbors are at the 60 to 80%, and Japan is at 210%, and the US is 180%. So I think we're all on the same boat, maybe except for what, China and South Korea. And therefore, if the main issue is, will we get a credit downgrade, then most likely everybody would be downgraded anyway. And back to Stella's point, the main focus should be how to get us out of that 16.5% hole that we are in, because the slower we act, the longer we're going to be in that hole.
Okay. Thank you for answering that as well, Fritz. Okay. Ma'am, there's another question. And I think it's safe to give it to you this time around. Would the government consider a temporary jobs initiative to stimulate the economy? Guaranteed or subsidized loans are helpful, but if people don't have any salary or income, how can these loans be paid anyway?
Oh, that was we've been really pushing for wage subsidies, and it's under the Arise bill.
Yeah.
We're pushing for 110 billion pesos worth of wage subsidies, precisely for purposes of promoting business continuity, so that workers are not let go. That was, however, of course, we were overtaken by events. People already started to lose their jobs, and so what happened in Bayanihan II was that we had to put in money for unemployment assistance now, because people had already started to lose their jobs. So there's some funds there for cash for work assistance, also some funds for the employment or deployment of contact tracers. So that's Bayanihan II's way of creating jobs for those who had lost their jobs during because of the pandemic. But again, I go back to my earlier point, the Bayanihan II budget is still just not enough. So we're hoping with GAA 2021, that's the budget for 2021 of government, we're hoping that there would be more funds for unemployment assistance. And of course, at the moment, we're still trying to push wage subsidies. But for some reason, our government is not too inclined to fund wage subsidies, as it seems.
Thank you, ma'am. Fritz, the next question I'll give to you. There is a client who's above 60 years old, I won't say the exact number, and has 50% of their investment, the 50% of their savings in the stock market at the time, or they invested 50% of their savings in the stock market when the level was at around 7,800. The client is asking, should they still add if they plan to retire in 4 years' time?
That's a tough one because of the age. If I could have a conversation with the client, my next question would be, assuming that he or she is retired, would they have other sources of income during their retirement? For instance, would they be renting out property or condominium units? That is very important in order to assure their level of quality of life post-retirement. But assuming none, I would just hang on to their existing investments. If the answer is yes, I would dare average down just to give them a higher chance of a recovery. Why? Because when we begin to share our outlook for 2021, we're looking at the stock market at 7,000. Sure, it's not yet at 7,800 or your 9,000 all-time high, but from these levels, that's an 18.4% upside, Patty, and that you're not gonna get that in fixed income investments or in time deposit. So it's worth the risk because the client is invested anyway, and buying now by averaging down, it would be able to allow them to bring down their cost and allow them to get out at a faster time.
Okay, at this point, we'll take our last question, and I'll give it to both of you because it's relating the Bayanihan II law and its impact on the stock market. Because apparently, in Bayanihan II, there's a section that repeals the IPO tax. Is this going to encourage more firms to do an initial public offering? And will this encourage more individuals to invest in general?
I'll take it first. Would it encourage more IPOs? Not under this climate. As Stella kept pounding on, and we share the same view, we have to have a solid grip of COVID-19 in order to successfully open up the economy some more. Will Bayanihan II have an effect on the stock market? I believe it will be muted simply because it's less than 1% of GDP and dispersed across like 15 different categories, Stella, right? So the impact would be muted in the real economy, and therefore, as investors, it wouldn't bump up the earnings of any company in a significant way.
But if I may add to the beautiful answer of Fritz, one of the themes of Bayanihan II is regulatory relief. So there are many provisions there that are intended to reduce the cost of doing business. So to the extent that those provisions are successful in achieving the goal of reducing the cost of doing business, then that should make businesses more profitable. And maybe that might encourage some IPOs. I don't know.
In terms of the bills in the pipeline, I just like to conclude. We're very excited to monitor, number one, the Arise bill that Stella has described in much detail earlier. Number two, reduction of corporate taxes. Number three, the FIST law that will allow the banks to clean up the non-performing loans. And I hope pretty soon Congress would really take a look at fiscal incentives, or even a rationalization of fiscal incentives in order for foreign direct investments to be captured by the Philippines. Right now, we're not even in the short list of companies that are considering to shift to Southeast Asia. And at a time wherein we need jobs, this would really help the cause.
Okay, as much as we'd like to get this afternoon's engaging conversation going, we'd have to cut it short. If you have additional questions or queries regarding your investments, please feel free to reach out to your respective relationship managers or send an email to bdoinvest@bdo.com.ph. Again, it's bdoinvest@bdo.com.ph with Market Sense in the subject line. Would also like to encourage you to answer a survey that will pop out after this webinar. We'd greatly appreciate if you can tell us what you think of today's episode, how else we can improve, and what other topics you'd like us to cover in future editions. So to our distinguished guests, Congresswoman Quimbo and Fritz, we thank you for spending a portion of your Friday afternoon with us. I'm sure I personally I learned a lot from this conversation. And again, we thank you for joining us today.
You're most welcome, Stella. We are so grateful. Thank you very much for joining us. The number of people that registered was just off the roof. A testament that a lot of people still want to understand what's going on and want to listen to you. Thank you.
That's absolutely great. Yes. Thanks.
Let me close this session by saying these last few words. As what you've heard from both our guests today, this pandemic has brought about a tough balancing act, from health to safety, businesses and jobs, all crucial to get the economy's engines revving up once again. The decisions that we'll make today during these extraordinary times, whether it be for your businesses, your careers, or your investment portfolios, can have a long-term impact. So have the courage to think big and act on opportunities. And lastly, let's all support one another so that together we can gear up for a recovery. In behalf of BDO Unibank Inc. and its subsidiaries, we again thank you for taking time an extended time to join us today. And we continue to wish for you and your family safety and good health. I am Patty Sandago, and we look forward to having you in another edition of Market Sense.
Thank you.